welcome back, traders and investors. We have Phillip Streible on the line, and he's a senior market strategist at RJO Futures. Early in his career, Phil began trading his own account as a screen trader, focusing on metals, grains, and stock indexes. And then he became licensed with AG Edwards and has spent quite a bit of time. I see that you were a senior market strategist at MF Global. Were you there when they hit the rough times?
Yeah, I was there. I was there all the way up until the very end, the very last moment that the lights were on. So it was an interesting time in my life. I was also before that with Refco, so I had undergone two major financial collapses.
And they took you on at RJA Futures, huh? That's no the MF Global. They've really, I mean, it's kind of faded off. What was it? Was it Dave Corzine, the Goldman executive? I mean, did they? I can't remember if anything really ever happened to them.
No, it didn't. It was a really unfortunate situation. They had, gone in and placed some leverage bets in European sovereign debt, and the way it worked, there were some transfers of money, and it appeared to become a shortfall in the customer accounts. When that happened, then the exchanges and the regulatory bodies stepped in, shut everything down. They lost their clearing member status, and the company was basically dissolved. And pretty much on a Friday afternoon, we were asked to leave. And on a Monday morning, I started working at RJ O'Brien. They've been around 100 years, so I think the probability of something like that occurring is highly unlikely.
Okay, so early in your career, you were active in the stock indexes. Now I see you're doing the futures. Are you or your clients active in the E-mini S&Ps?
Oh, quite active. And the thing is that the way you trade the equities right now, especially the mini S&P, I mean, the bias is to the upside significantly. There's a huge amount of wins behind it going to the upside. So if you're going to trade the equities right now, I mean, even with all these geopolitical threats we've seen, misses on economic data, but not today here. We had a big boost on GDP. Because of that, I mean, the best way to trade it still is to the long side, looking at buying dips, putting stops below key levels of support, and then when we start butting up against those all-time highs, you take a little bit off, and then just repeat the cycle.
So, are you or your clients, are you guys trying to trade this intraday? Are you doing some positioning? And also, how much significance do you pay to the overnight market and the pre-market trading?
Well, so, like looking at pre-market here today, we had two major bits of economic data. We had ADP, that's usually a precursor to the jobs report that comes out on Friday, that came out just in the low 200,000, and then we saw the expectations were closer to 230. Because of that, we saw equities come off. The S&P, it was up around 5 points when that number hit. It dropped down only up about 2 points, so that's going to equate to about a 30-point move in the Dow Jones. So you're getting a little bit of movement there, a little bit of volatility. But once GDP came out at 7:30 my time, Central Time, we saw that big bump up from up to 4%. Previous estimates were 3%. So huge boost to the economy. We saw equities shoot back up, and we also saw the metal markets fall pretty quickly. So a lot of volatility in the pre-market, that's for sure.
Right. So do you have clients that are trading around the clock, that 6 p.m. open? Also, you get Europe opening in the middle of the night, and then, of course, the equities open up at 4 a.m. Do you have clients that are up, trading that 24-hour market?
Yeah, especially right now. It's been, volume has been significantly increased, mainly due to all the geopolitical tensions and risks that have been going on right now. I mean, a lot of the developments with, Israel and the Gaza Strip, that's one one thing that's going on. You've also got the problems in Iraq. That's been kind of pushed to the back burner a little bit. That ISIS militant group, they've been quite violent. As the violence escalates, we start to see that affect markets like the crude oil, the gold market, a flight in the treasuries. And then, of course, you've got Russia and Ukraine. That is not... that is not slowing down at all. It seems like the Russian militants or the separatists have really, commanded a large region in Ukraine, and because of that, geopolitical risk is quite high right now.
All right, so in this day and age, you have a lot of self-directed trading. I mean, the ease of access through the internet. You really don't even need T1 lines anymore. So for people that have a broker, you must be providing them with some pretty good information. Is it the fundamental information that you like to keep your clients up on, or do you follow the S&Ps or other futures very closely and give them technical levels to look at?
Yeah, I mean, I've been working as a futures broker for over 10 years, so my knowledge on, all the major commodities is quite high. I've been through almost every possible scenario on probably every commodity, down from orange juice to meats to, metals, energies. It doesn't really matter. So, a lot of people are looking to work with somebody who's well informed on the markets and will give them trade ideas. The clients most of the time are kind of directing the way they want to trade or the style they're comfortable with. If there's somebody who's able to be, where you could speak with them, several times a day, a lot of times those guys are going to gear towards your day traders, but people where it's less frequent, they're a little bit more position trading. So once they inform me on what type of trading style that they're comfortable with, then what we do is I'll work on customizing some strategies in the markets that they're most keen in, and then we'll monitor the trades from there.
Okay, and so the different commodities, I mean, obviously for the agricultural commodities, you have to be on top of the weather and then also on the reports. So those are really fundamentals that if you're trading, you really can't ignore that. Is that the information that you provide to your clients, keep them current on crop reports and whatnot?
Yeah, almost every morning I go through a very systematic routine of, contacting the people that are trading your currencies, your metals, and your currencies, and letting them know, what overnight economic data broke out, whether it be some, Chinese data or, something that occurred in Europe. So contact those people, let them know how to position themselves best in the market. And then what I'll do is move on to the next market, which is the agricultural market. There's been a lot of, we're at a point right now where, if you do get, extended weather forecasts that'll forecast more rain, that could definitely improve crop conditions. So this is a key part of the growing season right now. So we do have to keep those farmers and those traders in agriculture, up to speed on all that. Plus, the number of reports that are affecting the agricultural markets, they've been, it seems like in this last year, everybody all of a sudden wants to keep track of export data and, USDA projections. So that's the type of information that we relay back to the customers as well.
Okay, and let's talk about the crude market. I mean, I follow this thing intraday, and I take a look at it, and I say, wow, this is a good level. I'm going to put an order in, and then, sometimes you look like 3-4 minutes later, and it's 30, 40, 50 cents away from there. I mean, you also have some people that would say that, boy, it's a pretty tightly controlled market, that you have some of the big boys, Morgan Stanley, Goldman Sachs in there, really having a tight lid, on the order flow and also what's going on. What's your take on the crude market?
Well, I mean, the volatility in the crude oil market is quite high. I mean, usually average true range is right around like $1, $1.50 a day. So there is, to see like 30, 40 cent move, completely expectable. We had a report that came out yesterday that was a API, as American Petroleum Institute. They came out with projections. They showed that crude oil inventories had declined 4.4 million barrels. So in the after-hour markets, you're going to see crude oil, push its way up a little bit. Today we'll have the Department of Energy release their inventory data. That's going to come out in about another hour. So we'll see another, move in volatility again in that market. If you look at crude oil from the U.S. standpoint, the West Texas, crude oil prices should continue to come under pressure. Right now, the U.S. is just able to produce, record amounts of oil. Our supplies are quite ample. There's no threat to any of our supply chain whatsoever. This is all because we're able to institute fracking, horizontal drilling, and really, boost our efficiency. I think that eventually that type of technology will spread around the globe, and you'll start to see, Brent crude oil prices, which is mainly the oil that they trade over in Europe. You'll see that start to come down as well. It's just that they don't have the technology yet.
Dennis and I we talk a lot about equities, and we also talk about the futures as well. But one thing that we tend to focus on, and I've also have some buddies that are commodity traders and system traders, and they really focus on the open and the opening print in relation to the high or low or close. Is that a part of any of your strategies, using that opening print as an entry, and then a stop above or below that? Is that part of any of your strategies?
Yeah, I mean, one of the, when I was raised and I first started getting, involved in trading, one of the old timers I followed, he would oftentimes look at, once that opening bell comes on the S&P, he would wait for the first two 15-minute bars. So basically the first 30 minutes of trading, which direction was it? Was it up? Was it down? Are we positive or are we negative? If we were positive and it was greater than, 3-4 points, the probability of the market continuing to have a positive day was highly likely. It was, greater than 70% chance. So what the gentleman would do is he would buy on the opening of that next bar, and then he'd put his stop in negative territory, and he would let the day take its course, exiting right at the end of the trading day. So there are, people and there are trading strategies that are built around that opening and how the market does, proceed from the opening. So, myself personally, I'm always looking for key developments that might occur during the day that might cause short-term fluctuations and volatility. So I'm a little bit more, sensitive to what's going on throughout the day rather than a one-time trade.
What about, and who was that trader that you followed, just out of curiosity?
He was an old-timer. He's no longer with us anymore, so he had passed on.
Could you just tell me his name?
It was Howard Katz. It was one of his strategies.
Okay.
So
okay, no, I just wondered. I just I've read a lot of books, followed a lot of traders. It just wondered if I knew who it was. So all right. So if people are looking to get involved in commodity trading, what kind of recommendations do you have for them?
Well, really you want to formulate a plan anytime you're gonna. This is a business, and if you're going to start a business, you don't just start, selling hot dogs out of the front of your house. You've got to have a business plan in place. I would start looking at, first of all, how much time are you going to be able to put into this? Are you going to be the guy who trades on end-of-day data, and only make those decisions based upon end of day, or are you going to be able to monitor it throughout the day? If you're end of day type guy, you're probably going to want to try and trade with the trend, and then look at, maybe a smaller quantity of positions with larger ranges. You're definitely going to want to use your stop losses, have them in place, and then have specific risk and reward ratios, you're going to want to use on every single trade. The other thing is you've got to have a way of measuring your results, throughout either the week, the month, or quarterly. Have some kind of gauge, and then put that against, what else could you do with your money? Could you end up going out and buying a rental home, and will your returns be better? Or, could you buy some other small business, and would those returns be better? Remember, this trading is a business, so you've got to treat it like one.
Okay, and in just being in the business for so long, you're given your lessons from people. Just what besides that, I mean, as far as like, is there any books or is there something that you could recommend, for strategies that might help people get oriented with the markets?
I mean, there's a couple things. I mean, I personally, when I'm looking at, I'm about to go on vacation here next week, okay? And one of the books that I'm going to take with me is Reminiscence of a Stock Operator. That is one of, it's a historical book written on one of the greatest traders of all time, written on Jesse Livermore. He basically used a breakout strategy in the market, and it's really phenomenal and fantastic to read about people trading in the 1920s and the 1930s when information was so limited, and becoming so successful. So as far as reading other people's mistakes, that's a great way to start off. And then what you want to do is you want to start honing in those skills. So you'd develop some kind of way of trading by reading the historical books, and then you start sharpening everything up. You might use, like, RJO's got a research department. They've also got a number of booklets and pamphlets like Technical Analysis Guide and option trading guides, and then that's where you start to bring those skills back up to 21st century, and then you start working with an individual like myself and develop a plan.
I've read that book about 5 times, so that's a great book. Anybody in the room that take a look at that great book. Well, thanks a lot for coming on, Philip. We really enjoyed your chat here, your tips on the market, and we hope to have you on the show once again.
All right, thank you very much.